Hey everybody, this is Jim at SP500chart.com. It is about 10 after 4 here, just north of Atlanta. It is February 25th, 2013. Wow, what a day today. We're going to take a look at the chart. And before we get started, just need to remind you as always that the website and the video are for educational purposes only. Nothing stated at the site or in the video is intended to be used as investment advice. What I mean by that is don't follow what I say. This is intended to be educational. It's intended to help you look at charting in, I don't want to say new and fresh ways, but in a manner of speaking, the old stuff is kind of new and fresh to a lot of people. That said, I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I'm not a licensed financial professional. I'm just a guy that draws lines on charts. Okay, here we are looking at a long-term chart. As a matter of fact, each candle is 8 days here. And what I want you to see is that when we have made significant tops over the last 15 years, they have taken quite a while to form. Okay, this top that formed around 2000, actually the entire top, one interpretation of it would be that it took almost 2 years for that to form, and it was fairly tall. Another interpretation would be that we would have seen the breaking of a trend line placed over the last 3 or 4 bottoms, so that the break right here really would have signaled maybe someone who did mostly trend line analysis. But the top itself, which was sort of a head and shoulders top, not a pretty one by any stretch, but you can see that took a long time to develop. Then we fast forward to 2007, where we were in a channel, popped up over that channel, and remember, you pop up over a channel, you can't count on that to be anything you can't count on that to be particularly good news. Let's put it that way. So, formed another sort of a head and shoulders pattern again, but again, a clear break of a trend line if you were following the trend that had developed over the last 4 years going into that break. Again, that was a fairly tall break. So if you waited and sold on the pullback, you would have been okay. There was no pullback back here, so this would have been a little tougher. Let's fast forward to now. What we have been looking at, I want you to see the scale of these tops. Now we're going to zoom in and look at what we have been viewing. What we have been seeing over the past months is nothing in scale to what we saw in 2000 and 2007. As a matter of fact, if anything, if we end up with this being a top, I would suspect that our topping pattern here would be 6 months to a year long, maybe longer. So I just wanted to point that out so that when we start looking at this, we don't get confused and think that what's taken place over the last month or so is a major top. It could be the top of a major top. But this little thing that we've been looking at lately, in and of itself, I don't think the scale is there for that to be a major top. Now, what happened today? Well, you know something? Somebody asked me, and people have asked me a number of times, you have these targets, but when will this target get hit? And I usually say, Charts tell you more about what price level to expect and less about when to expect them. At least the way I look at charts. I know that there are other ways to look at it where time factors become very important. And I just have to kind of plead ignorance on that. But I will tell you this, what happened today, I guess in light of what we've been seeing, if you've been a subscriber for a while, you'll recall this. If you're new, then you won't, unless you've gone back and listened to way too many videos to bring yourself up to speed on what I do. But I'll say this, we have seen a number of inverted head and shoulders patterns over the past 6 months or so that have formed and then just real quickly broken out without really making much of a right shoulder. As a matter of fact, if we go to a 2-hour chart, we'll see one where we had a inverted head and shoulders candidate right here. Left shoulder, head, right shoulder that was about a third the size of the left shoulder. Again, would have loved to have seen some symmetry in this. We didn't get it. So, by the way, what was the target from this pattern? Yep, up in the 1560s. So it looks like, according to that we may not be done yet with this rally. But I will say this: what we saw today was I don't think we've seen a down day like this in a very long time. And what made it particularly interesting is that at one point we were up 7 or 8, I believe, and now here we do close down 27. So really about a 34-point swing in the market in the S&P today, a big swing in the Russell 2000, swing in all the other indexes as well. And why did I bring up the idea of these truncated patterns? Well, because in our weekend video, a weekly review for last week, I made the comment we may be looking at the formation of a head and shoulders top here. And if that's the case, let's give it another week to a week and a half for it to flesh out. And lo and behold, the next day, boom, we're underneath this line. Now, I'm going to do some thinking out loud, and this is just an idea. It's not a fact by any stretch. But the idea is this: why would we be getting these inverted head and shoulders patterns that don't, quote, fully mature? And why would we get a top pattern up here that, quote, doesn't really fully mature? Well, you think about it. If we are getting near a top, then we're starting to attract, the markets are starting to attract a different kind of investor. And what I think may be going on here is the markets are beginning to attract people who are less patient, who are more prone to making quick decisions based upon the way they feel, as opposed to maybe being a little bit cooler-headed. Now, you know, there are terms that are used. You have some people use the term strong hands, weak hands. Strong hands would be people who buy in the bad times and are patient. They know, I'm going to let this work out. I bought when there was blood in the streets, and I'm going to let the markets now just do their work. And then weak hands are people who buy in a frenzy because they don't want to miss the boat, and they also sell in a frenzy because they don't want to get killed again. So maybe that's what we've been seeing over the past 6 months. Maybe there's more of these impatient investors coming on board. So if we move in, for some reason a 30-minute chart truncates the data, so we're going to a 15-minute chart. And we're going to look at this whole little pattern that we were seeing. I have to make one small move of this line right here. And what you can see is that there's our high today, about 1526, and we close 1488. What is the difference? Someone quickly do the math. Is that a 38 point? That's almost a 38 point swing, which is more than a 2% turn in the day. If you're a candlestick reader, you would call this probably I don't know. You might call it a bearish engulfing candle, or other people might call this an outside reversal, where the high of the day was higher than yesterday, than the last trading day's high, and the low today was lower. So this was this big engulfing swoop. And like I said, we haven't seen a down day like this in quite a while. So interesting to note that if we, again, adjust this line a little bit, essentially the high of the day was a solid back test of this broken channel line. We mentioned that, and I always try to shoot real straight with everybody. And what I said was, I didn't know coming into today whether or not we would reverse at this line, or whether we would power on up and test this red line, and briefly got over it, but not for very long before the market had its say. Now, one thing I want to point out, and that is this is a technically important line down here at about 1497. We closed the day roughly 9 points underneath that line, and I'm just going to say something. This might be something of a caveat, but that the move underneath this line is not necessarily horribly technically significant. The move off of this back test is tremendously significant. But had we bounced here, it would not have surprised me. And all I'm going to say is this. There's a possibility that we are under this range to the same degree that we this morning gapped up over it. In other words, I'm not sure that the reason we closed at 1488 might be the fact that we gapped to 1524, essentially. So, like we've seen before, sometimes we might be in a range, but if we get out of range just for a bit, then the counter move can also go out of range just a little bit. So there is an outside chance that the S&P could recover and get back into this range between 1497 and 1515. But you know, I just mentioned that because I see that the degree that we were over this line is almost exactly the same degree that we then shot under it on this back side. It's just an observation. So if we back out from this chart a little bit, you will see that we are getting quite close to testing this lower yellow line. And this line has its genesis in the mid-November lows and then the late December lows. So let's see if this, excuse me, whoa, I just belched. I am so sorry. Let's see if this has any technical significance as we look at it going into tomorrow's trading. It could very well. This This looked like it had the nice potential to make a head and shoulders pattern. And something that looked like, gosh, it sure would be pretty if we had the same size shoulder over here, so that when the pattern broke, we also would take out this longer term trend line. But, if wishes were horses, the rest of the saying. So, tomorrow, what I would be looking for, if we do have more follow-through selling, then I would be watching this line very closely. That's only about 13 points under today's close. But if we were to suddenly show a little burst of strength and get back over 1497, then I would expect for us to maybe spend a little more time between these two lines, as the S&P did. Let me see which 15-minute chart, as we did back here in mid-January through the about the early part of the second week of February. That would seem to make more sense to me. But I have to be honest and tell you that trying to make sense out of the markets has been the downfall of many. So let's just read it for what it is. It looks like a likely break of this support here at 1497. But again, just to remind you, not by a technically significant amount. And just like this morning, we got up over this 1515 line, but not by that 1% margin that we look for. Had we gotten up over that by 15%, not 15, by 1%, then we would have been up over back into this red lower channel, and it might have produced a recovery of this channel. But right now, this sure is looking like a legit break of that trend, a back test, and then some swift selling pressure. But again, looking at what I was hoping to get in the way of a head and shoulders, look at that little, again, it's just a little stub of a right shoulder. So if we continue selling pressure, watch this line. If we regain this range, then expect to bounce around between these two purple lines for a while. Either thing could happen. Guys, thanks for watching. Thanks for your support. And let's see what the rest of this week brings us. This is certainly getting interesting now. Take care.